Okay, so hello and welcome everyone to today's session. Sorry, I was saying that ACCA has a policy as far as the examinations are concerned that you are watching this video when you are done with all the lectures. So ACCA has a policy that it publishes past exam questions, but when we talk about past exam questions, the past exam questions are usually published of section C. That is CRQs. Okay, so we all know this, that ACCA only publishes CRQs, that is questions of section C. We all know this. Rarely, if you will go on ACCA website and find the past paper questions, so it's very rare, maybe hardly one attempt, that you're able to find questions from section B MTQs. MCQs are never published by ACC. ACC never publishes MCQs, even if you go to ACCA website. It's not about just a F5 performance measurement, okay? Performance management paper. You talk about F7, financial reporting, you talk about taxation, F6, you talk about financial management, F9, you talk about audit and assurance. MCQs are never published. And what should students do? They don't have the examination MCQs. They have the long questions, section C from the past papers, but they don't have MCQs and MTQs. Okay, so what do is they usually rely on kits, the revision kits, to prepare for MCQs. That's what all of you do, that you all have no MCQs present in the past papers. So you take out the Kaplan kit, you take out the BPP kit and do MCQs from that. Okay, and when you do MCQs from that and you go in the examination hall, many students complain that even we did 150 to 200 MCQs from the kit, the examination MCQs were slightly different or completely different, so we were not able to perform better in MCQ section. Now this is a complaint of all skills level students, okay, no matter from where he belongs. He performs well in section C of the exam, the CRQs, but he does not perform good in MCQs, MTQs, reason being the MCQs, MTQs are not published. Okay, so what are we planning to do? In this webinar session, I will be dealing 20 examination MCQs with you, right? These examination MCQs are past paper MCQs generated from different sources of reports, right? These are those MCQs which have come up in real exams of last few attempts. So when I will be solving these MCQs with you, these are those MCQs which you are solving real exam MCQs, not the kid MCQs. And maybe if you are lucky, you go in the examination hall, you might get one or two MCQs from this particular data, the MCQs which I'm sharing with you. So our plan in today's webinar is to solve these MCQs. We are going to solve 20 MCQs with you. Okay. And the MCQ file from which we will be doing MCQs, I'm sharing this MCQ file with you on the WhatsApp group. Okay. You can open it on your laptops or PCs, whatever. I will also show that MCQ file on the screen, but you must have that file with you as well. So we will be solving those MCQs, and hopefully your MCQ preparation will also improve, and these MCQs will help you in real exams. Okay, so I forwarded this on the WhatsApp group. I've shared the WhatsApp link, I think 10 times now. So please join it. Okay, so I have shared the file with you as well, and the questions are in front of you as well. So let's start doing them. Okay, the first MCQ which is in front of you is double company. Okay, these are real exam MCQs, and do remember to prepare this even one day before going to the exam. Watch this lecture again and solve these MCQ files again. It will be very helpful for you. So double company provides a photocopying service for its clients at a price of 0.1 per copy. Okay, double company provides a photocopying service for clients at a price of 0.1 per copy. So the price per copy is 0.1. Okay. Double company provides a photocopying service for clients at a price of 0.1 per copy. It needs to choose which of the two new photocopier models to rent. So it is seeking which photocopier models to rent. The cost of each model are given in the following table. Now there are two models which it is confused in S&T. Rental cost is 10,000 and 8,000, and cost per copy is 0.03 and 0.05. Okay. Two models are under consideration. One is model S and one is model T. Okay. The rental cost is 10,000 and 8,000. This is the rent, and the cost per copy is 0.03 and 0.05. Now this is the date of the question. We are on question number 1. Okay, so question number 1 states that double company provides photocopying service. Price is 0.1 copy. It needs to choose which of the two new photocopying models to rent. Costs of each model are given in the following table. Two models ST, rental costs are 10 and 8, and cost per copy is 0.03 and 0.05. Okay, what is the requirement? What is the minimum number of copies per year at which model S would be preferred to model T? It's asking minimum copies at which S would be preferred to T. Now, what is the meaning of this? Minimum copies at which one model would be preferred to other model. Now, those copies at which one model would be preferred to other model, this is the copies at which both models, the minimum copies at which one model would be preferred to other, is the number at which both produce the same profit. Okay, minimum copies at which one model will be preferred to other, or one product would be preferred to other, minimum number is the number at which both would produce the same profits. The four options are 100,000, 142,857, 160,000, 150,000. Okay, so the four options are 100,000, 142,857, 160,000, and 150,000. Okay, so these are the four options. It's asking minimum number of copies at which one model would be preferred. Minimum number of copies at which one model would be preferred to other. The meaning of this minimum copies at which one model is preferred over other is the copies or the number at which both produce same profit. Both produce same profit. Okay, so let's check profit of model S&T. Let's check profit of model S&T at both. Okay, let's suppose there are 100,000 copies. Please pay attention to the working. Let's suppose there are 100,001 copies. Okay, so at 100,000 copies, what is the profit of S? Selling price is 0.1. Selling price is 0.1. And for S, the cost is 0.03. So deduct selling price from variable cost. It's contribution into how many copies? 100,001. Okay, less fixed cost. What is the rent? 10,000. Okay. Two 999.93. And at 100,001 copies, option A, what is the profit of T? Selling price is 0.1 minus variable cost is 0.05. So profit per copy into how many copies? 100,001 less fixed cost here is 8,000. Okay, so at 100,001 copies, profit of both is same. Okay, but if I change the copy number to 142,857, see, price is 0.1. For S, the cost is 0.03 into how many copies? 142,857. I can mention cell A11 minus fixed cost is rent 10,000 for S. For T, 0.1 is the price. Cost for T is 0.05. Profit per copy, how many copies? 11, option 2, minus rent is 8,000. So you see, for 142,857 copies, the profit of both is not coming same. For 160,000 copies, 0.1 is the cost, selling price, sorry. Cost of S is 0.03. How many copies? 812, 160,000 minus rent of S is 10,000, 1,200. And for T, 0.1 price, cost is 0.05 into how many copies? 812 minus cost is 8,000. See, profit is not coming same on 160,000 copies. Okay, and finally on 150,000 copies, let's check S. 0.1 is the price. If we take S, cost will be 0.03 into how many copies? 813 minus rent is 10,000. 500 is the profit. And here 0.1 is the cost, price, sorry. Cost is 0.05 into how many copies? 813, 150,000 copies minus rent is again not coming same. 500 profit, 500 loss, 500, 500, negative, positive. So that means 100,001 is the copies at which both models are showing the same profit. So the correct answer of this will be option A, this one. Minimum number of copies at which one model would be preferred over other is always the one, minimum copies at which both produce the same profit. You can see on all others options, the profitability is not the same, so they won't be the answer. On the first option, both are producing same profit, so this is going to be your answer. Okay, so remember, whenever it asks minimum copies at which one model would be preferred to other, it's always the one at which both models produce same profit. Okay, if you want to quickly take a snap or copy, you can quickly do it because you will get the recording later, so you can revisit the solutions, because we don't have so long time that every question is copied. So it's just a quick thing. If you want to mark everything or just note down something, you can do it. Okay, so do remember this: whenever it asks minimum copies over which one model would be preferred over other, one product would be preferred over other, it's always the one showing same profits. Okay, so check all options profitability. At whichever option both models produce same profits, that is going to be the answer. Okay. Okay. MCQ number 2. MCQ number 2. Match the stages required to the correct step number to describe the sequence used when operating target costing. Now you just have to match the stages required to the correct step number to describe the sequence used when operating target costing. So I just have to tell the sequence of target costing. Cost of the product, determine the profit margin, set the selling price, use functional and value analysis, identify the cost gap, develop the product concept. Now, if you see cost of the product, determine the profit margin, set the selling price, use functional and value analysis, identify the cost gap, develop the product concept. What do you think among all is going to be the first step? Develop the product concept. Okay. After developing the concept, what should you do? Set the selling price. Okay. Then what does target costing say? Determine the profit margin. Okay. When you set the selling price, deduct the profit margin, you get the target cost. Okay. Selling price less profit margin is the cost. Okay. Selling price less profit margin is the cost. When you get the cost, you should compare it with your own cost to get the cost gap. And once you get the cost gap, you should try to find ways to reduce this gap. So use value analysis, value engineering to reduce the gap. So in my opinion, this was one of the most mark scoring MCQs. It's just 2 marks. Now people complain, sir, our previous MCQ took a lot of time. The previous, which I solved with you, question number 1. Okay, it took a lot of time. Fine. It took double the time. But see, the question number 2 balanced it. Just matching the stages and sequence. Okay. You know that in target costing, we first determine selling price, then profit margin. But before that, there is one thing coming. Develop the concept, set selling price, profit margin, deduct them to get cost, compare with cost to get cost gap, and reduce that. Okay. So you can note these. Okay. Third, ROI and RI are commonly used divisional performance measures. We all know ROI, RI are commonly used divisional measures. Match the following statements about advantages and disadvantages of the performance measures to whether they apply to ROI only, RI only, or both. Now, many people fail to understand these type of questions. That first is a statement that ROI and RI are commonly used divisional measures. Match the following statements about advantages and disadvantages of the performance measures to whether they apply to ROI, RI, or both. Now match the statements on whether they apply to ROI, RI, or both. Match the statements. improves due to the use of carrying value in asset valuation. You have to match it, the statement that improves due to use of carrying value in asset valuation, whether match it applies to ROI or RI or both ROI, RI. In short term, it can conflict with NPV indicators. You need to match it, whether it applies to ROI or RI or both. Always increases when new investments earns returns greater than cost of capital. So whenever an investment earns greater than cost of capital, this statement applies to ROI, RI, or both. Facilitates the comparison of managerial performance in divisions of different sizes, whether this statement applies to ROI, RI, or both. Now, please pay attention. Statement 1. Improves due to the use of carrying value in asset valuation. This statement applies to ROI, RI, or both. Now, if you have just gone through the advantages and disadvantages of ROI and RI, if you have just gone through the advantages and disadvantages of ROI, I don't know about others, but my students, they must know this. I have taught you that ROI, RI both increase when assets get older, right? So if company is using carrying value means net book value. Okay, if company is using carrying value, that means net book value of asset. You know, when assets get older, the depreciation gets on booking. So the net book value, carrying value goes down. And when net book value, carrying value goes down, the formula for ROI is PBIT over capital employed. When the net book value goes down, the asset value goes down. The asset value goes down means capital denominator goes down. So denominator goes down, ROI will increase. And similarly, RI is pre-tax profits less interest. And interest is capital employed into interest rate. So when you will use carrying value, net book value, obviously carrying value or net book value means the asset values goes down as they get older. When net book value goes down, the capital employed goes down. And when capital employed goes down, capital employed into interest rate, the interest cost will also go down. So this will improve your ROI as well. So this statement that it improves due to use of carrying value in asset valuation, this statement applies to both ROI and RI. Let me tell you by writing the formulas as well. The formula of ROI is PBIT divided by capital employed, right, into 100. And RI is pre-tax profits minus notional interest. Okay, so notional interest, this notional interest, it was capital employed into interest, right? So please pay attention. If you use carrying value, the net book value, assets keep on getting older, depreciate. So the net book value goes down. So capital employed, assets less liabilities. The net book value goes down, the capital employed goes down. So capital employed denominator goes down, ROI increases, and capital employed goes down. So capital employed into interest rate, the notional interest goes down. This will increase ROI. So this statement that improves due to use of carrying value, ROI, RI, not just only ROI, ROI, RI both improve due to use of carrying value. So this statement applies to ROI, RI. Second is a very easy disadvantage. In the short term, it can conflict with NPV indicators. Yes, ROI, RI both conflict with NPV, net present value, one you studied in F2 management accounting. It's a disadvantage straight written in the book that ROI, RI both conflict with NPV. They don't match with NPV. Okay. Third, always increases when new investments earns returns greater than cost of capital. Whenever new investment earns returns greater than cost of capital, earns profits greater than cost of capital, ROI increases. Why not ROI? Because in ROI, cost of capital doesn't come. In ROI, cost of capital doesn't come. So whenever you make a new investment which earn profit higher than cost of capital, what is the definition of RI? RI is the profit over cost of capital, right? What is the definition of RI? RI is the profit over above cost of capital. So whenever you make an investment which earns profit over cost of capital, your RI would increase. This statement only relates to RI because ROI doesn't have cost of capital. And there is just one left. So either you know the reason or not. It applies only to ROI. Facilitates the comparison of managing performance in divisions of different sizes. This is what the purpose of ROI is. You see, there are two divisions. Division A, Division B. There are two divisions, Division A, Division. Let's suppose profit of Division A is 10 and of Division B it's 100. So what you can say? Division B is better. Okay. But then I say Division A got a profit of 10. It invested 50. And Division B got a profit of 100. It invested 100,000. Now which one is better? A. So looking at the profit only, you cannot compare different size divisions. But if you find ROI of both, percentage of both, you can compare different size divisions. So this statement that facilitates comparison of performance in divisions of different sizes, this applies to ROI. Now, people might be wondering that in examination, this question would have been difficult. It's not. It's just because you don't memorize the advantages and disadvantages of ROI. It improves due to use of net book value. It applies to both ROI, RA. It can conflict with NPV. It's written in the book. It conflicts with NPV. Both ROI, RA. Increases when investments earns return higher than cost of capital. It applies to RI only. Okay, because ROI doesn't have cost of capital, and the fourth one to ROI. Okay, you can match these, please. Okay, now I will be doing two more questions, and after that we will take a short pause. And if you have any questions in first 5 MCQs, please let me know. Okay. Okay. In question number 4, Suman, both are allowed. Don't worry about it. Question number 4. Product C currently sells 8,000 units per year at a price of 50. So price is 50. Market research showed that an increased price of 2 would decrease annual sales by 800 units. Okay. What is the marginal revenue at 6,000 units? Okay. Now question number 4. What does this question number 4 say? It states company currently sells 8,000 units at price of 50. So 8,000 units price is 50. Okay. And increase in price of 2 would decrease demand by 800 units. That means when price increases by 2 becomes 52, it falls by 800 units, becomes 7,200. Okay. Increase in price of 2 decreases demand by 800 units. So if you check about the price, it increases by 2 becomes 52. And units fall by 800 becomes 7,200. Now requirement is, what is marginal revenue? Marginal revenue is MR at 6,000 units. Very easy question of pricing. Okay, we all know the equation of MR is, whenever asked to find MR, the equation of MR, A minus 2BQ, right? Equation of MR is A minus 2BQ. So we just need to find A, B, and Q. You will get MR. Okay, find A. A is the price at which quantity is 0, right? A is the price at which quantity is 0. So check it. Price 50, units 8,000, increased by 252. So it becomes 7,200. Then it increases by 2, becomes 54. It becomes 6,400. Then it increases by 256, 5,600. Keep on increasing the price by 2 and demand falls by 800 units. Okay, so you will see price at which quantity is 0, A will come to 70. Just keep it increasing by 2 2. Okay, and demand will decrease by 800 units. So next 54 becomes 6,400 units. Then 56 falls by 800, becomes 5,600. Keep increasing by 2, demand falls by 800 units. So price at which demand becomes 0, it's 70. Then B. B, you have been taught, it's change in price over change in demand. Very easy. B. Change in price over change in demand or change in quantity. So applying that, change in price is 2, 50 to 50 to 2, over change in quantity is 800. Okay, so you have got A, B. Let's find MR. A minus 2BQ. So MR A minus 2BQ, A is 70 minus 2 constant into B. What is B? 0.0025 into Q. What is Q? It's asking MR at Q, 6,000 units. 40. So your correct answer for this is 40. Okay. You can note this if you want. Okay, so it was a very easy question on pricing. That marginal revenue A minus 2BQ, you know how to find A and B from the classes, and Q is 6,000. Question number 5. After that, I will take a 5-minute pause and you can just go through all the questions. If you have any queries, you can ask me. A company's actual production data is as follows. A company's actual production figures are as follows. Material 2000 kgs, cost is 10,000, labor and overheads are 26,000, then 2000 kgs cost is 36,000. There is a normal loss of 10%, then there is an abnormal loss, and then there is a good output. This is how it works, that you input material, labor, then there is a normal loss, then there is an abnormal loss. In terms of environmental cost categorizations, how would the normal and abnormal losses be described? Now, this is a very general question. How would normal and abnormal loss be described? Normal loss, potentially hidden cost. Abnormal loss, conventional cost. Option A. Option B, normal loss is potentially hidden cost and abnormal loss is contingent cost. Option C, normal loss is conventional cost, abnormal loss is contingent cost. And normal loss is conventional cost and abnormal loss is contingent cost. Okay. Now, just one thing, knowledge from the book, which will help you answer this immediately. Contingent cost is any cost that refers to cleanup or disposal. Okay, it's a future cost. Contingent cost is a future cost, like cleanup cost, dismantling cost. It's a future cost. So since normal loss and abnormal loss never are future, they are present. So contingent costs are only those which occur in future, like cleanup and dismantling. So contingent costs can never come in normal or abnormal loss. So all these three options say abnormal loss is contingent cost. Remove that. Contingent cost is only cleanup or future costs. This makes a correct answer A. Normal loss is a hidden cost. Okay, it is not visible, like water boiling loss, it's a hidden cost. And abnormal loss is conventional cost. Okay, so I have solved 5 MCQs with you. If you have any queries in these 5, go through them. Please quickly ask me, and then after 5 minutes, we'll resume again.
प्रश्न सिर्फ लिखा हुआ है मैंने सवाल क्लास
Okay, recording of this webinar will be shared on group, don't worry. Okay, so in question number 1, minimum number of copies at which model S will be preferred. I told you that whenever question asks about minimum copies at which one product will be preferred over other, the solution is that find the profit at both levels. The point at which the option at which both models give the same profit, that will be your minimum number of copies at which both produce the same profit. So we check the profit at both for all 4 options, and in option 1 they were giving same answer, so that's why I selected. Question 2 was very easy, sequence of target costing. Okay, question number 3, simple advantages, disadvantages of ROI RI, that when you use net book value, carrying value, both improve applies to ROI RI. Conflict with NPV, drawback of both ROI RI. Investment earns return over cost of capital. This is for ROI only because cost of capital is not in NPV, and the fourth one, sorry, not in ROI, and the fourth one is for ROI. Question number 4, very easy, marginal revenue. An equation of marginal revenue was A minus 2BQ. I can find A here, price at which quantity is 0, increasing price by 222, decreasing units by 800, at which point units become 0, the price 70, that is A. B is change in price 2 over change in quantity, 800, you get B. A and B are present at Q. Marginal revenue is Q 6,000 units, so put Q 6,000, you get marginal revenue. Okay. And question number 5, it's asking that normal and abnormal loss fall in which categories. Remember, I just told you about contingent costs. Contingent costs are future cost, cleanup costs after production is over. Abnormal loss and normal loss never fall in contingent future cost, therefore I removed option B. Correct answer is A. Normal loss is always a hidden cost because you are boiling water and 10-20% gets evaporated. It's a normal loss, it's hidden. And abnormal loss is a traditional conventional cost. Okay, now question number 6 is a very simple question. Yes, Abiha, you only need Excel classes, Excel practice for section C. MCQs, MTQs are solved roughly. You don't need Excel there. Question number 6 is which 2 of the following statements? It's asking about which 2 of the following statements about forecasting based on simple linear regression are correct. Which 2 statements about regression are correct? Now you all know regression is a topic, correlation regression. So which 2 statements about regression are correct? Very easy question. It can account for the effect of multiple independent variables. Now this statement is wrong. You all have studied regression during your classes. Regression can only account for 2 variables, X and Y. It can never account for multiple, more than 2 variables. No, only 2 variables can be handled. So it can account for multiple variables. This is wrong. It assumes that historical data is a reliable guide to the future. Correct. Correlation regression. They always use the historical data. Now, what do you do in regression? You might have studied regression in your classes, specifically if you're studying from me. Regression is a forecasting technique. In regression, you forecast, like you're given 4 or 5 pieces of data and you're asked to forecast for a future. So how do you forecast in regression? You use the past given data. Like you are given data for 2001, 2, 3, 4 and asked for data of 2005. You use the historical data to predict future data. You are given data of January, February, March, and you are asked to forecast for August. So use the historical data to forecast for the future. So regression believes that historical data is used for future. This is correct. It is not suitable when variables show strong negative correlation. Now, either there is positive correlation or negative correlation. You can use this technique. No one taught you this, that when there is only positive correlation, you can use that. Either it's positive or negative, you can use regression. Cost forecasts using extrapolation are less accurate than using interpolation. This is right. Now for this, I need to train you what is extrapolation and what is interpolation. Extrapolation means you are expanding the data. And interpolation means you are using the inside data. Now, what do you do in pricing? You just solved a pricing question. That price was 50. And demand was, you just solved the question of pricing. Price was 50. And demand was 8,000 units. And then price became 52. Demand became 7,200, remember? Then to find A, you extrapolated that. You said, okay, now increase of 2, reduced it by 800. So further increase by 254, further increase by 800, then 56, 600. This is extrapolation. You expand data. And in interpolation, you use the data available to forecast. Which is better? Extrapolation or interpolation? Interpolation is always better. Because in regression, what do? You do interpolation. You are given 4 pieces of data. You solve that data and get the answer. Whereas in pricing, you do extrapolation. You expand things. Okay, if one time price increased by 2, demand fell by 800. So whenever it will increase by 2, demand will fall by 800. Extrapolation is less accurate because that's your assumption, that's your analysis. Whereas interpolation, you work within that data. So interpolation is more accurate, extrapolation is less accurate. This statement is also correct. So option B and D should be treated as the correct answer. So whenever anyone asks you extrapolation is accurate or interpolation, always interpolation. Because in extrapolation, you are assuming figures yourself that whenever price will increase by 2, demand will fall by 800. So in future also, when it will increase by 2, demand will fall by 800. This is extrapolation, you do in pricing. That's less accurate. Interpolation using the inside data, that's more accurate. Okay, MCQ number 7. Core Care Trust is a public sector health and care home providing care for the elderly. So Core Care Trust is a public sector trust providing care for the elderly. Income is received on a contract basis from the local government authority. Care workers are mainly full-time staff, but occasionally temporary staff from a local employment agency must be brought in at a greater expense to fill staff rota gaps. Okay, so core care trust is the public sector health and care home, providing home for care for the elderly. Income is received on a contract basis from the local government authority. Care workers are full-time staff, occasionally temporary staff is hired. There is a regulatory body monitoring the work done by care homes known as CHQs2, which sets targets for the standard of care expected. It is generally regarded that residents spend much happier time whilst in a care home if they are able to establish long-lasting relationship with care home staff providing direct care. So general regard is that residents spend much happier time while in care home if they're able to establish long-term relationship with care home staff. If they have good relation with staff, they're happy. The 6 performance measures below are used by management of core care trust to monitor performance as part of value for money framework. 6 measures are used by management to monitor performance. Match the performance measures to the elements of the value for money framework. Okay. Match the performance measures to the elements of the value for money framework. You know, value for money is economy, efficiency, effectiveness. So match the performance measures to the elements of the value for money framework. Direct staff costs as a percentage of contract income. Temporary staff usage hours as the percentage of total staff hours. Food cost per meal served to residents. Achieving CHQ's designated standard of care for the elderly. Number of voids, the number of empty beds as a percentage of total staff turnover. Okay, so there are 6 things mentioned. 1, 2, 3, 4, 5, 6. Match the performance measures to the elements of value for money. Now, there are 6 performance measures, 1, 2, 3, 4, 5, 6. And there are 2 boxes in economy, 2 boxes in efficiency, 2 in effectiveness. So you need to match out of these 6, which 2 will come in economy, which 2 will come in efficiency, and which 2 will come in effectiveness. Okay, so you have to match which 2 will come in economy, which 2 will come in efficiency, and which in effectiveness. Now, if you know the definitions of economy, efficiency, effectiveness, this is very easy. You know, economy is low cost. Economy is low cost. Efficiency, more output from less input. And effectiveness, objective is achieved. Objective is achieved. Okay. So there are 6 performance measures. You need to match them on value for money. The boxes are 2 for economy, 2 for efficiency, 2 for effectiveness. You know the definition of economy. Economy means low cost. So wherever cost is coming, that's economy. Wherever cost is coming, that's economy. So you know cost is coming in number 1. It's not coming in number 2. And cost is coming in number 3. So 1 and 3 fall in economy because economy is low cost. So 1 and 3 are coming in efficiency. Efficiency usually relates to hours. Efficiency usually relates to hours, time. Okay. So efficiency suits to five. And effectiveness is objective achieved. Okay. So what is the objective? Any objective here? Achieving CHQ's desired standard care for elderly. This looks an objective. Effectiveness and staff turnover, having a low staff turnover is always an objective. Okay, so these are the 6 portions matched. Because efficiency measures resources, right? So staff beds, they're both resources of the organization, right? So this is measured efficiency and effectiveness is the objective. So 6 was a very easy theoretical question. That regression assumes historical data and guides for the future, and extrapolation is less accurate, interpolation more accurate. Here, 6 measures: economy, efficiency, effectiveness. Economy was very easy because cost comes in economy. Efficiency, hours, resources, and effectiveness, the objective. Question number 8 is a very easy question. A company wants to know whether there is a correlation between number of hours worked and value of factory overheads. Following figures have been calculated: summation x, summation y, summation x square, summation y square, summation xy, and n. Which of the following statements, if any, are correct? Which of the statements are correct? The correlation coefficient is 0.9. Correlation coefficient is R. So R is 0.9, this statement, and 90% of the variation in factory overhead is explained by changes in number of hours. So variation is measured by determination. Variation is measured by coefficient of determination, and coefficient of determination is basically R square. Okay. So which statement is correct? Correlation coefficient R is 0.9 and determination R square is 90%. So to verify which statement is correct, R is 0.9 and variation R square is 90%, you need to find R and R square. Now the formula of R would be given in the exam. It's N. N is 8. Summation xy. So summation xy is 1, 2, 4, 7, 5. Okay. Minus summation x, summation y. So you can see summation x is 89. Sorry for the writing. Actually, my writing pad got damaged in the morning. So that's why I don't have the writing pad. That's why the writing is a bit off. So summation X is 89. Summation Y is 1, 0, 6, 3 upon under root n, that's 8, into summation x square. So summation x square is given 1, 0, 4, 7, minus summation x whole square. That is 89 whole square first bracket and then bracket n 8 summation y square. So summation y square is 1, 5, 0, 2, 5, 1 minus summation y whole square. So 1, 0, 6, 3 whole square bracket closed. So the formula of coefficient of correlation is given in the exam, n summation xy minus summation x summation y upon n summation x square minus summation x whole square. Aman, it's a basic question. Correlation coefficient is r and variation is r square. So when you calculate r by taking the r formula and I solve it, the answer comes to 0.9. That means coefficient of correlation is 0.9 and statement 1 correlation coefficient is 0.9. This is correct. Now let's find r square. So if you are about to find r square for variation, so 0.9 square, the variation is gonna come as 81%. So variation is 80%. And what is the statement saying? 90% variation is explained by changes. So variation is not 90%. 0.9 square variation is 81%. So statement 2 is false. So what is the correct answer? Which statement is correct? 1 only. So Khat, if you have not studied in F5, you should study because that's a part of the course. If you are self-studying, go from the book. If you have studied from any tutor, he should have taught you. Correlation regression is a topic in F5. So to check whether correlation 0.9 is correct, I found the correlation, and to check whether variation was correct, I found the variation and then gave the answer. Question number 9 is a very easy MCQ of transfer pricing. Which two of the following bases for setting a transfer price are most likely to result in goal congruent behavior by both selling and receiving division? So which two of the following bases for setting transfer price are most likely to result in goal congruent behavior? So which two bases for setting transfer price are most likely to result in goal congruent behavior? Opportunity cost, market price, actual cost, standard field cost. Now, if you remember the lecture of transfer pricing, for those who have studied from me specifically, remember I told you two rules of transfer pricing: minimum, maximum, right? So what did I teach you about minimum transfer price? It's a marginal cost plus opportunity cost. And what did I teach you about maximum? It's the lowest market price. So that means three things come in transfer pricing. Three things come in transfer pricing: marginal cost, opportunity cost, and market price. What's the question asking? Which two are better? So is opportunity cost better? Yes. Market price comes? Yes. Actual cost doesn't come. Full cost doesn't come. So three things come in transfer price: marginal cost, opportunity cost, lowest market price. It's asking for two. So two options are opportunity cost and market price. Okay. Okay. MCQ number 10. Indicate by clicking on the relevant boxes in the table below whether each of the following statements made about short-term decisions are true or false. You have to check whether the statements are true or false. Joint costs are relevant in decisions about whether to sell product at split off point or process further. I have taught you in classes that when you have to take decision about whether to sell product at split off point or process further, you take incremental costs and incremental revenues. Joint costs that are incurred in the past, they are sunk costs, they are not relevant. So this statement, joint costs are relevant in decisions about selling product at split off point or after further processing. This statement is false. Joint costs are never relevant. Future costs, incremental costs are relevant. Joint costs incur in the past. You know, when you sell product at split off point or process further, joint costs are the initial cost. When you are deciding whether to sell product or split off point or process further, only incremental costs and revenue should be considered. Any past cost, joint cost, sunk cost should be ignored. This statement is saying joint costs are relevant. This is false. Okay. The relevant costs and revenues in decisions relating to operating of internal service department or the use of external services are the differential between two options. The relevant costs and revenues in decisions relating to use of internal service or the use of external services are the differential cost between two options. Now, to take the decision on whether to use internal services or to use external services, what do? We decide by taking differential of both. So this statement is true. Like, for example, I tell you, if I use internal services, my cost will be 100. And if I use external services, my cost will be 120. So what is the relevant cost of using external party? 20, right? Differential, because internal service is doing 100 and external is doing the same work in 20. So you should prefer internal. So how much you saved? 20. This 20 was the reason you took the decision, right? And why did you avoid going to external party? Just because of this 20. So whenever you take the decision of using internal external, you always take the differential. So this statement that relevant costs and revenues relating to decisions of internal service or external are differential, this statement is true. Okay.